And now we come to a trade of the day, the highlights of this week's trades. Let's get into it. Welcome to this week, where we bring you current news on everything finance, business, the markets, and investment funds. This week, crypto funds count down to Bitcoin's halving. The halving, which happens roughly every 4 years, is a change in Bitcoin's underlying blockchain technology designed to reduce the rate at which new Bitcoins are created, making it more expensive for miners to put new Bitcoin into circulation. Some crypto fans believe that the halving will lead to a rise in Bitcoin. When the last halving happened in May 11, 2020, price rose around 12% in the following week and 659% in the following 12 months. Others believe that because Bitcoin hit an all-time high in March, that price will not increase post-halving because it's already been priced in. Also, this week, hedge funds turned bearish in the markets. Hedge funds globally have turned the most bearish they've been on equities this year due to sticky inflation and renewed geopolitical concerns, which have dragged price stocks down. They ditched long position and added short ones across all regions, led by North America and Europe. As traders, it's important to be aware of what the big players are doing in the market because those are the people that the market is going against, not us tiny little retail traders, okay? Welcome to Trade of the Day, a weekly series coming to you every Saturday on Am the Trader. We'd love to know where in the world you're tuning in from, so post in the comments below where you're watching or listening from today. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet should have access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market taking one trade a week using one model, risking no more than 2% of your equity, looking for a 1 to 3 risk to reward, risking 2% to make 6%. We had a total of 3 trades this week that could have netted you a potential of 10%. But remember, our target is 5% for the week. But before we dive deep into this week's trades, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader needs to have in their trading to survive and thrive in the financial markets. Confidence in your trading edge comes from 3 things. 1, understanding the market and how it operates. 2, having one trading model that has IPTA signatures. 3, having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the 3 step process I use to take trades weekly. Step 1, condition. This is based on a higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, because once you understand where the market is going and you understand the setup, the entry is easy. If you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. All right, now we get into it. Step 1, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This week, we were expecting the weekly candle to expand higher. That doesn't mean it has to close higher. As you can see, institutional order flow on the higher time frame is bullish. Down close candles are supporting price. Price is finding it easy to break highs and it's not spending long time below lows. Fair value gap BISIs are supporting price higher as well, okay? Currently, we're bullish in NQ. We are seeing retracement in the market right now that doesn't deter us from that higher time frame directional bias. Then we have step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It lets us know when to look for a setup. We look for medium to high impact news drives to narrow our focus. We stock setups on calendar day and after the news release. The optimal days to trade this week were Monday, Tuesday, Wednesday, and Thursdays, because those are the days that we had news, high to medium impact news coming out. Secondly, we look at this, what sets up your trade. What does it look like? This will be your model. Since we were expecting the weekly candle to predominantly expand higher, we went into the market hunting long formation. For our buy model, we want to see liquidity taking below a kilo or a kilo probe. Displacement higher causes a market structure above the kilo. We wait for a short-term low to form in a market structure below 0.25. Then we place a limit order at the short-term low, stop loss at the swing low, targeting a 1 to 3. It sounds complicated if you're hearing it for the first time, but it's really simple. You just need to keep showing up on the charts and look for it. Now let's look for it in price action this week. Monday, April 15, trade of the day breakdown. We start with the economic calendar. Remember, it tells us when to look for a setup. Monday, as you can see, we had high impact news coming out at 8:30. So we're waiting for the news to come out and then we're anticipating the setup. Okay. So as you can see, price traded below a kilo. Liquidity was taken below that kilo. We had a displacement higher, causing a market structure shift above the kilo. We're waiting for a short-term low to form in a market structure below 0.25 for an entry, okay? So the short-term low was formed right here. This was a PM session trade. We got in that trade at 2:01 and we exited that trade at 2:12 for a total time of 11 minutes in this trade. We did lose in this trade. You would have lost 2% here. But however, this was just to show you that not every model is gonna have 100% strike rate. You're gonna lose in this game. That is the only thing promised to you. Okay, so this entry met our criteria. Everything was a check mark, but we ended up losing. Charge it to the game, 2% down. Okay, we ended the day at 2% down on Monday. Then we had another setup form on Wednesday, April 17th. Let's break down this trade, okay? Always, we start with the economic calendar. As you can see, we have medium impact news coming out at 5:30 post market close. As you can see, sorry, we had a setup form, price traded below a key low. Displacement higher causes a market structure shift. This is one of the times where liquidity isn't taken below the key low. Remember, I said the kilo can be probed, and if we get a displacement higher, causes a market structure shift, that still is a viable setup. We're waiting for a short-term low to form in a market structure below 0.25. Forms right here. So our limit order would have been right there. That was a launch session trade. We got in at 12:57, broke even at 106, exiting that trade at 137 for a total time of 40 minutes in the trade, targeting 1 to 3. This was a 6% in the bags. End of the day at 6%. So from Monday to Tuesday, Monday we was down 2%. At 6%, we're at 4% for the week so far, and our target is 5%. You could have been done at 4%, and nothing wrong with ending the week at 4%. But if another opportunity presents itself, then according to the model and our plan, we can get in, okay? Thursday, April 18, we did have another trade of the day. Let's break it down, guys, all right? As you can see, looking at the economic calendar, we had high impact news coming at 8:30 and medium impact coming news at 10. We're waiting for those news to come out and then we're anticipating our setup. The setup can form prior to the news, but we're not looking to get in until after the news, okay? As you can see, right here, the setup did form prior to the news, as I was saying. So 9:30 open, we dropped below key low, displaced higher, caused the market structure shift about above the key low. We're waiting for a short-term low to form in the market structure below 0.25. Time is the most important thing. 10 o'clock, we had news coming out, so we're waiting for the news to come out, and then we're anticipating a setup. As you can see, after 10 o'clock came, we had a short-term low formed below 0.25. Our limit order would have been at that short-term low. This was an AM session trade. Got in this trade at 10:03, broke even at 10:36, exit in the trade at 10:50 for a total of 53 minutes in the trade, 1 to 3. Drawdown for that trade was 52 ticks, coming out on top with another 6% in the bag. So we ended Thursday 6% up. So from Monday, Wednesday, and Thursday, we're looking at 10% so far for the week, okay? This week, we showed you 3 opportunities that could have netted you at least 5%. 2% risk. If you're taking all three of these trades, you're looking at a total 10% for the week, which isn't bad, trust me, okay? That's better than what most people's mutual funds make them in a year. But yeah, always remember we're looking for one trade that will net us 5% and then we're done trading for the week. This week, we were anticipating the weekly candle to expand higher. And even though the week ended up closing bearish, really, really bearish, like it's a deep, deep retracement, we were able to go in and hunt down a few buy formations that netted us off 5% for the week. If you found value in this information, then make sure to subscribe and turn on post notifications if you haven't already. This skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you guys for watching and tuning in for Trade of the Day. See you all next Saturday, same time, same place. Happy hunting.